And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Forecast, my fellow futures traders, friends, and family. It's Tuesday, September the 20th. I'm John Hoagland. Thanks for trusting me with your time as usual. And typically we're focusing on context, risk management, and patience every morning here. Good morning to everybody. If you're already in the markets, I hope things are going your way already. Of course, we're looking forward to your success with everything we do here. As far as economic numbers this morning, we should all be well aware that the FOMC meeting begins today. At 7:30, we had some housing numbers come out, housing starts and housing permits. Kind of mixed information there. Permits were a little bit lower than expected, but housing starts a little bit higher than expected. U.S. stocks are set to open a little bit lower this morning, but about even on the week so far as the FOMC meeting gets underway. The NAHB information indicated yesterday further contraction in home sales. Again, today starts in permits, and we have more housing numbers due tomorrow in existing home sales tomorrow. Crude prices have kind of been holding pat on questions of demand and probably still awaiting in new information, supply numbers, API, EIA, FOMC. Everything seems to be kind of falling into balance. We're going to see that in the charts here very shortly. With the lack of Fed speakers talking Feds, we have the ECB's President Lagarde speaking today. I'm thinking about 1 o'clock p.m. in lieu of any Fed speakers. VIX is about 3% higher this morning at 26.59. The dollar index also leaking higher again, 110.12 last I checked, and the yield on the 10-year continuing to leak higher at 3.56 first thing this morning. As always, make sure you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome. Subscribe to our YouTube channel. You get notified when we do go live. Speaking of YouTube channel and going live, we have the Coach's Playbook today at 11:30. At 12:30, we've got the Top Step Trading Strategies, Session 2. Hopefully you enjoyed Session 1 yesterday. I look forward to seeing you on Session 2 today. Right after the forecast, however, we do have Make Hoag Money, and then we've got the recap at the end of the day. So another busy day here, and hopefully it'll be a good trading day for you. If there's something that you like about the forecast, hit the lucky like button and tell your friends. If there's something that we're missing, tell me. jhoagland@topstep.com. You can send me an email. Let me know what you're looking for. We've been thinking about taking a couple of the products off the list that we're looking for and focusing more on the more popular products, and I think that's a good idea. Let me know what you think. Good morning, everyone. The Rooster wins the prize this morning. First one in the room. Shaw, good morning, Michael. Hope everyone has a great trading day as well. Good morning, my brother Rick. Love you. Tachyon, Glitter Sandwich, Theo, Scott saw, and he conquered. George Duque, I should say. Good morning, George. Dan, Jules, chilling with Dylan, Brody, Serenity Trader, good morning. Terry King, Vince, my guy, Marcelo, John Doherty, good to see you. It was great to see you this weekend. Sarah Hall, good morning. Prayers and love to you as well. That letter opener, Jay Orion, our guy that just got his funded account. Got to his funded account yesterday. Looking forward to hearing some good things from you, Orion, of course. JTS Wave, Ron Merlot, good morning. Ron Merlot, Trading Research, Travis, Mr. Fox, good morning, Grim Reaper Trader. Yeah, it's kind of most of my wardrobe is black, so not trying to warn anybody about anything tomorrow. Of course, you never know, right? JNR, good morning, George, good morning. Lacey's up on the couch, resting peacefully right now. Three Lions, Haggle Matters, good morning. Unicus with his quote for the day, love this. Joe Lewis said, everyone has to figure to get beat sometime. The question isn't did you fall, it's did you pick yourself up and move ahead. Great quote again, Unicus. Thank you again for those. I think we all really enjoy those, and I know I do. Rusty Golfer, good morning. Denny Z. Ricardo, where is the link for the strategy session, for the strat lesson? Let me see. Webinars, strategies. Here is the link to register. This is the direct link. I'll put that out there for you. That's for the strategy session at 12:30 Central Time today. Three Lions, can you put the link for the trading strategies thing? Yes, there it is. Three Lions. There's the link so you can register. They're going to be recorded, and you'll have the opportunity to see them again. This is actually the second time through them. We went through them. I think right around the beginning of the summer. So there's recordings of them out there already. We just thought we would rerun them. Rusty Golfer, there's the link for it. Is there a recording of yesterday's session? Yes, there is. It hasn't been released out there to the world yet, but it will be shortly. You'll all have access to them. Koss, good to see you. Nice to see you. Nice to meet you. All right, Dr. VJ, Joe, Eduardus, and I think we've got everybody accounted for here. We're going to look forward to seeing what we've got in these charts this morning. We're coming near the end of rollover for most of these markets that have been in rollover, which is a good thing. Rollovers always tend to make me a little bit crazy. So we're going to jump into the charts here, starting with the daily in the S&Ps. So we can get to make Hogue money in due time here. So let's take a look. So here's the daily in the S&Ps. Yesterday was the day when all of the remaining open interest in the September session was settled in cash. There were 439,000 September expirations that settled in cash yesterday. That's about typical. Somewhere between 400 and 500,000 is what we usually see. So yesterday we had a feeble amount of volume, which we could be expecting because of the FOMC meeting on Wednesday. We added 3,000 overall when we take away the 439,000 expiration that we lost yesterday. So rather feeble open interest and volume coming off the weekly kickoff low yesterday. But again, it's something that I would be expecting because we know that we have the FOMC meeting coming tomorrow. Short time frame control is what that is telling me. We don't have major players executing to adjust any major inventories. They're more working on hedging so that they can protect themselves against anything that happens tomorrow. Look at the trend line that comes off the low here in June. Some kind of contact, more contact, better the opportunity to see opportunities there. Our overnight low back right to it. So it was supportive, now resistant. That may come into play for us today, and I think it's something that a lot of shorter time frame traders are focusing on. All right. So it's kind of giving us a degree of resistance, at least in the overnight session here. Here's the 30-minute. Okay, yesterday we left the opening range at the low of the session, and we finished the day at the high of the session. That would have been a great day to take that opening range trade and make hog money, but today's probably not going to be the best day to do that. Why? Well, we've got a late spike to the upside here. The base of the late spike is 39.0375. We've got overnight inventory to the short side, but opening below the base of that late spike is, at least for the time being, indicating a rejection of higher pricing. Where are we? Well, right now we're between value high and value low from yesterday in a very sticky, very choppy, very just two-sided trade area. I don't really know how we're going to be looking for opportunities early in the session and make hog money, but we will see what we see and we will do our best. So we do have some overnight inventory that was to the short side. Look at what it did for us yesterday. Overnight inventory. The overnight started about here. Price continued to push lower, getting short time frame traders short. When the market opened, it became relatively obvious, I guess, to them that the market was not going to be continuing to pay them to the short side, so they had to get out. We left the opening range to low of the session, and where did we bring price? We brought price essentially right back to where the overnight began. Well, we've got another situation. Our overnight began here. We've looked higher, we're looking lower, but we're kind of central in yesterday's range and in a sticky area. The difference between yesterday and today, we were down against a longer time frame inflection level that was creating support for us. So today I'm going to try and stay patient. The market is telling us that the move to the upside yesterday wasn't all that great. The volume, open interest were both kind of slow, telling us that was short time frame traders. There wasn't a lot of new money coming into the market yesterday. So I think we're going to probably be looking for opportunities to let the market establish an early range and work the extremes of that range. Should be, as always, still an interesting session in Make Hog Money, as we have a whole bunch of traders discussing what they're thinking, what they're doing, and trying to make me some money. Take a look at crude oil now. Crude, about to open in 2 or 3 minutes. We may watch the opening range or check the opening range as we continue through the market forecast this morning. But we had another situation. Overnight inventory was very short. It involved a longer time frame inflection level. When the market opened yesterday, it looked lower, couldn't take out the overnight low. Buyers came in, and all of our overnight shorts started to bail, bringing price back to where? The beginning of the overnight session. This is very typical of overnight inventory adjustment. Why did it happen yesterday? Because our longer time frame traders are still looking for the opportunity to limit their risk according to what may come out in the FOMC. Now, this is crude oil. Why would they be worried about that? I think everybody's worried about that. Crude oil is very pivotal on demand. If the economy continues to do poorly, I think we'll see crude oil continue to have trouble on rallies. If we get some good news, if something else happens other than what is expected, we'll have to see what happens then. So it looks like we're going to be opening with a slight gap. Let's get through the NASDAQ here, and maybe we'll take a look and we'll see what happens with the opening range in crude oil. Opening ranges have not been all that successful lately. Keep that in mind. Here's the NASDAQ daily. Excuse me. My goodness. So here's that same trend line in the S&Ps. Contact, no contact. We're a little further away from those levels here in the NASDAQ than we were in the S&Ps. We lost 69,000 in expiration. We had a bigger jump in open interest in the NASDAQ on the up day yesterday than we did in the S&Ps. 4,500 additional overall, not including, of course, the 69,000 that we lost in the September expiration. So it does indicate maybe a little bit more stronger buying coming in here in the NASDAQ. Well, the NASDAQ is 10% deeper from the all-time highs than the S&Ps, it makes sense it's going to present stronger when it's strong, and it's going to present weaker when it's weak. Short time frame control again. Especially, of course, prior to the FOMC. We've got space on both sides to find support and resistance. We found a little bit of support near last week's low yesterday, and we see maybe a little bit of resistance as we get closer to this trend line. Again, I'm not looking for anything huge to happen today. I'm looking for the market to give us the opportunity to be patient. I'm looking forward to giving it the opportunity to establish some relatively decent ranges early in the session, and then I'm going to look at the opportunities at those extremes to see if I can find a decent way to limit risk. Whether those extremes are going to be extended and I'm going to go with the extension, or if those extremes are going to be faded and I'm going to go against those, it doesn't really matter because it just gives me the opportunity to limit risk. Here's the NASDAQ. The base of the late spike in the NASDAQ is 11,978. We're opening below the base of the late spike. That says that the market is rejecting higher pricing. Same thing in the S&Ps. The market is attempting to reject higher pricing when we open below the base of a late spike. Big thing is we don't have any big players. The big players are still working on hedging and getting themselves positioned for whatever happens tomorrow. Overnight inventory is short. We are opening in range and in value, which says to me, try and stay patient. And I'll see if maybe there's some opportunities at the base of the late spike in the NASDAQ, as well in the S&Ps. And we're going to see that and make Hogue money. Let's take a look and see here. What do we got? Well, we've got the opening range finished in crude oil. And really just looks like a kind of a smaller opening range here. What are we here? We're 46 to 50 to 77. Smaller opening range. We did take a look above. We've opened with a gap. If it is indeed a gap. E491. $85.44, 81. So yeah, we do have a little bit of a gap. Initially, it looks like the opening range is being left at the low. Not very aggressive here, though. Not very confident. So with the lack of a gap close in the opening range at the low of the session, I'd look for opportunities to buy weakness. But again, I'm not looking for anything huge today, which probably means it's going to be. Probably means it's going to be huge. Here's gold. Here's the daily. Third day in balance. Volume has just been crushed. Open interest, we added 2,000 yesterday. Relatively inert. There's a lot of indecision in this market. Take a look at the 30. All right, so we've got a triangle or slash pennant formation. We recently just traded down to and through that level. We've got 1, 2 points of contact, 1, 2, 3, 4 points of contact, no real acceptance. The market is in range and in value from yesterday. Overnight inventory is a little bit to the short side. I'm really just kind of hoping that this market is going to provide a little bit better opportunity than it did yesterday. Already we've got a little bit of a head fake outside of this trend line, showing some signs of rejection. So this was the trend line I was a little bit more leaning on because we have 1, 2, 3, 4, 5 points of contact before we looked below it. So with the rejection there, I'm going to probably be looking for opportunities to buy weakness and perhaps a little bit of a inventory adjustment early in the session today. I'm a little late to the party for that. Here's the euro. Let's start with the daily. Here's the daily. Yet another test of weekly kickoff low that just doesn't want to go anywhere. It's just a brutal grind we've got going on here in the euro. We got a nice uptick in the dollar recently. That gave us a nice test down to weekly kickoff low, but we're still in balance. I'm keeping this market on the back burner. Volume and open interest is still blurry as this is a later rollover. So I'm just kind of monitoring for opportunities. We added 2,600 in open interest yesterday, and again, that could be somewhat of a rollover blur, if you will. Here's the 30. We've got some pretty deeply established areas of excess here. One of them we just traded down to, which is weekly kickoff low, tested and rejected late last week. We've come down here so many times and been unable to actually reach that level. We got pretty close to it here. This is what I'm talking about when we're looking at fading extremes of balances. I mean, this market came straight down. It's a difficult trade sometimes to take, but when we don't get any acceptance or time outside of the area of balance, we look to fade the extremes. We look for the market to come down here and turn around and come back into value, maybe a full rotation to the high of the area of balance, which I look at as our overnight high from last night is kind of an interesting level because it's kind of the upper extreme of balance that we've been in. So what I like about these is it gives you the opportunity to limit risk. Anytime you come near one of these longer time frame inflection levels, it gives you that opportunity. Sometimes they do become magnetic, but at least you're not losing the whole rod and reel. I'll give up a couple of worms, no problem, but I don't want to take any big losses, and these levels give you that opportunity. 10-year, finally we're seeing some momentum and some continuation to the downside. Here it is on the daily chart. Let's take a look at this one. Just a straight shot. I mean, 45-degree angle, one time framing lower in every time frame. We know rates are going to be going higher, and this just makes sense to me now. There were some periods of time up here when I was like, why? This makes sense. Here's the 30. So testing to it yesterday, overnight inventory, we're to the short side, but we are against a longer time frame inflection level. We've gapped lower. I think it's going to be a hard short to get into today, but I think it's the thing to do. Rates are going higher tomorrow. What do we do? I would love a nice pullback right back to weekly kickoff low so I can, again, use that level to limit risk. And for the natural gas. Daily. It's in rollover now. Rollover is scheduled for Friday. We'll watch the volume and let you know if we were going to be trading it when we would move. So far, the volume is still greater in the October contract. Where are we? Well, let's get rid of this. Head and shoulders. We had an opportunity to break out below the neckline yesterday that failed and actually added 2,600 in open interest off that level. Remember, it's in rollover, so that's going to be a little bit blurry. Excuse me. And volume is slow in the front month because it's rolling into the next month. So this makes things very difficult during rollover. We rejected below weekly kickoff low yesterday. The head and shoulders I'm still viewing as intact. What we may have done is maybe just change the neckline a little bit. We're going to have to see what happens if we do continue up here and the next time we break down back below that level. what now is the question I'm asking myself. Like, all right, we were looking for this. Did happen, but it didn't. What do we do now? Well, what didn't happen? We didn't take it apart. So I'm looking for opportunities to kind of pull back a little bit deeper to the upside, maybe, put a little bit more of our right shoulder up here, and then maybe see the market move back to the downside. But that's just technical stuff. That's just, what I might think might happen. Excuse me. Short covering, but an increase in open interest. Again, that's rollover for you. Overnight inventory is looking a little bit to the short side. We've opened in the center of value. I'm probably going to be looking for the market to establish some sort of daytime frame range and then work the extremes of that range. You guys probably get tired of hearing me say that, but it's what to do. You want to avoid the gooey middle. Rue, if ES isn't providing good entries, would you consider looking into CL? Well, we're all set up for the mini S&Ps, so we're going to stick with that for a little while. Let me have some coffee here. All right, I'm better now. Thank you. Okay, so, all right, we've ripped through the forecast pretty well here. I'm going to get things set up for Make Hogue Money. Rue, I'm hoping that we do find some decent opportunities, some good ideas. If I remember right, we have Matt Hoyt, one of my friends from the trading floor, is going to be joining us and sharing his ideas for us today. If I remember correctly, I'm not sure if he's going to make it or not, but we'll have plenty of folks there with plenty of good trading ideas. We look forward to these, and so I look forward to seeing you at Make Hogue Money. Take your deep breath. Stay humble, grateful, and creative. Remember to stay centered. If you're not centered, you're not going to be able to make anything beautiful. And that's what we're looking for. We're looking to make some beautiful trades today. So trade well if I don't see you. Don't forget we have Coach's Playbook. We have Top Step Strategies. We have the recap. We have lots of opportunities for us to sit back and chat for today and every day. So I look forward to seeing you later. On that note, get out there and profit. Trade well today.